Hey, there's a different kind of video for us. Once a week, I'm on the road. Today, I'm on my one wheel going through my community. One location, one market, one situation that has my full attention. This is Field Picks. And the reason I'm doing this is simple. When something is happening in the market, a stock move, a sector rotation, an economic development, any kind of trade seizes, I want to show you how I react on that in real time. Not really from my armchair back home. I'm not teaching a framework here. I'm just reacting to what's happening, sharing my conviction on a real situation. This week, it's Amazon, a stock I really have conviction on. But next week could be something completely different. A market situation, a sector play, an economic concept, whatever has my attention. And whatever I feel is important for you to know at that time. That's Field Picks. Most people think Amazon is a shopping website, right? You too, yeah? You order something on Friday, it arrives by Saturday or latest Sunday. And that's Amazon for us. And because that's all you see, you miss the actual business. But here's the thing. Amazon isn't a retailer. It's a toll booth. It's the infrastructure that controls what gets sold and who buys it. And that changes everything about how you value it. Now, I use something that's called the money map method for investing. That's my framework. And I need to be clear about that. Let me tell you something. The money map method has two paths. Path number one is for most people. Index funds, markets following, minimum time, minimum effort, no conviction research. This is the calm wealth approach for the majority of you guys. Path number two is for people like me. And both paths are okay. But path number two is for people that spend extra time. We take an extra risk and we research individual opportunities, stock sectors, market situations, and we build convictions around them. We take positions based on what we actually believe in. And within path two, there's a specific category, and I call it the Bedrock stocks. These are the positions I hold for a very, very long-term horizon. Multi-generational wealth, you can say. The foundation of families' financial security, that's Bedrock stocks. These are the stocks I recommend to my mom to buy, and she does. These are the stocks I recommend my daughter to buy, and while she still argues with me, she also buys. Stocks strong enough that I'm comfortable putting them in front of people I love, and for a very long time, obviously. Bedrock stocks aren't common stocks. I keep them rare. Because they have to meet a very specific threshold to become a Bedrock stock. Now, let's be realistic. The forward thesis that I have on them projects 10 trillion by 2036. That's a bull case, right? But here's the thing. Even if that bull story doesn't fully materialize, even if we have to dial back to a base case or even a bear case, and I have to take care that I don't go through the holes here, I'm off-road with my one wheel, then this investment still looks incredible good. The fundamentals are that strong. This series, Field Picks, is for path two investors. But today, I'm showing you why Amazon qualifies for something even more specific. The Bedrock stock status. Let me show you why Amazon has my conviction. And I call this the backward thesis. But in order to give it to you, I have to sit down. Otherwise, I have an accident. I changed my mind. So I call this the backward thesis. It's not exactly a framework that I created. It comes from financial mentors and giants that I follow. And I use it to analyze the historical data. In 2021, Amazon had 400 billion in revenue. In 2026, that same business had 716.9 billion. That's an 80% increase in 5 years. Now here's my question to you. If a business nearly doubles its revenue in 5 years, what should the stock price do? Well, common sense says, well, it should go up, right? Significantly, I would say, right? But the stock only went up 22%. How is that? While the S&P 500 returned 86%, Amazon goes only up 22%. So while the business was getting nearly twice as big, the market was hammering the stock, punishing it. That's the backwards thesis. At full speed, I would say. The historical dislocation. But here's what makes it even more important. And I have to concentrate on that. So, not only did the revenue double, the margins expanded dramatically. In 2021, Amazon's operating margin was 5.9%. By 2026, it's 11.7%. The company is more than twice as profitable on every dollar in revenue. The business just got bigger. The business got more efficient. And the stock lagged the market anyway. That's the backward thesis. The company is mathematically cheaper now, even though it's objectively better. That's called a margin of safety. And I need now a margin of safety because I'm going to go off-road. Ooh la la! Now let me explain the market thesis while I'm off-road. This comes from research I follow. Market research distinguishes between market-driven companies, let's say reactive, and market-driving companies, proactive. The winners reshape consumer behavior. And I shape some floor structure here in a moment. Amazon has transitioned from a store to a marketing utility. When you look at Amazon's revenue, 40% comes from retail. That's shopping website, low margin, high volume. That's not where Amazon makes its money. That's what people see. But 60% comes from the hidden layer, one abbreviation, AWS, cloud infrastructure. That is a moneymaker. Advertising and third-party marketplace services. That's the real money for Amazon. That's the stuff that you don't see. And that's the marketing thesis. Let's focus on advertising because this is where Amazon's power, and this is where the power lives. In 2021, Amazon's advertising revenue was $31 billion. In 2025, it hit, listen to that, $68.6 billion. And it's growing at 22% a year. Double the rate of their retail business. But here's what people miss. Amazon's advertising isn't just a side business. It's the engine that powers retail profitability. Here's how it works. You search for something on Amazon, the algorithm decides what you see. Which products show up first? Which ones get buried? Amazon controls the entire bridge. Between your intention and your purchase, that's a closed loop. Search, discover, purchase. All in one place. All controlled by Amazon. And because Amazon owns the closed loop, their advertising conversion rate is 10.33%. That's nearly 8 times the industry average. When you advertise on Amazon, your ads actually work because they're showing people exactly what they're searching for. At the moment, they're ready to buy. Analysts estimate that advertising now contributes nearly all of the operating income from the entire retail segment, which means Amazon can keep retail prices really low, kill competitors, and still be incredibly profitable. That's not a retail company, that's a marketing utility. That's the marketing thesis. It's the hidden 60% controlling its value. Now I know what some people are thinking. Amazon's spending $200 billion on capital expenditure in 2026. That's more than Google, more than Microsoft, more than many. And in general, the market is super nervous about it. We've seen that the sell-off of the last few weeks has been terrible. Here's what's truthful. Yes, of course, there is a depreciation burden from this capex. For the next few years, however long they decide to depreciate these chips, this spending will create some kind of drag on the reported profitability. That's real That's factual. But here's my professional view on that. Beyond that depreciation period, however long they decide it to be, the long-term growth of Amazon is unprecedented. This CapEx is building their infrastructure for the next era. They will control the internet. 3 specific investments. First, AI data centers, computing factories where AI models are trained and run. Right now, every AI company depends on NVIDIA's chips and leases infrastructure from the big ones, Google, Microsoft, also Amazon. And Amazon is building its own. That means lower cost, faster innovation. And they own that layer. Second, in-house chips. They are called Trainium, specialized processors designed for training AI models in Amazon scale. Specialized processors designed for training AI models at Amazon scale. NVIDIA charges premium prices, but Amazon is just building their own Trainium at 10% cost reduction at Amazon scale. That's hundreds of millions in saving per year. Third, Project Kuiper. I hope I pronounced that right. Amazon's satellite internet network. You heard me right. Thousands of satellites in low Earth orbit, providing global coverage. That's a new revenue stream. That's defensible once it's built. These aren't just consumer products, they are toll booths as well. Once built, they are defensible. They generate revenue for decades. Here's the forward thesis. The 2036 roadmap. By 2036, the forward thesis projects Amazon's annual revenue reaches $2 to $3 trillion. You heard that right. Net income around 500 billion a year. Apply a 20 times PE multiple on 500 billion in earnings. That's $10 trillion market cap from a 2.13 trillion today. Well, one thing you need to keep in mind is a few years ago, we didn't have any company in the market that had even $1 trillion market cap. And by now, we have multiple $1 trillion market caps. So here we go. AWS alone is projected to become a standalone $1 trillion per year business unit by 2036, growing at 20% annually. That's the forward thesis. That's the path to 10 trillion market cap. And it all depends on this CapEx working out. On building infrastructure that becomes the backbone of this global economy. And here's why Amazon earns Bedrock status. Here's where the proof comes from. I researched 3 analytical frameworks. I call them theses. The backward thesis, the marketing thesis, and the forward thesis. These aren't frameworks I created. They come from financial mentors and giants and analysts I follow. I combined them to build my own thesis. Then I shared with you and with my daughter. My daughter Noor, she is 15, and I said, here's what I found. Here's the backward view and the dislocation in valuation. Here's the marketing thesis, how advertising powers profitability. And here's the forward thesis, the path to 10 trillion by 2036. Study it. Look at the data. Tell me if it holds. She studied it, she understood it, and she agreed with it. At least I have one fan. So yes, she's invested in Amazon already, and monthly she dollar cost average her cash into Amazon. But that's not why it's a Bedrock stock, of course. She invests because the thesis stands up. The backward thesis proves the company is cheaper now despite being better. The marketing thesis proves the advertising engine funds retail profitability. And the forward thesis shows the path to 10 trillion. Her willingness to invest based on understanding the thesis, that's credibility. Absolutely. That's proof that the analysis holds water. That's why Amazon has earned the Bedrock status.
So that's Field Picks number 1 concluded. Amazon, a Bedrock stock, not a trade, a very long-term story and conviction. If you want to understand the full money map method for investing, active investing, including what qualifies as a Bedrock stock and how to evaluate them, your own convictions with these 3 theses, backward, marketing and forward, comment below with the frame emoji. You know, you type in frame and an emoji will come from a picture frame, post that, and I will send you the details. Because conviction investing isn't really for everyone, but if it's for you, you should do it right. And with the process, with real research, with understanding so clear that a 15-year-old can follow the thesis and act on it. This is the Field Picks series. Once a week, I'm on the road. Today on my one wheel, tomorrow, who knows? One location, one market. That could be a stock pick, a sector rotation, market development, an economic concept, whatever has my conviction and my attention at that time. Hit subscribe, hit like, and thanks for watching. See you next week.